I think quite a lot of it is technical. Some of it is that the market is still directionless, and I think people are finding their feet. And I characterize it as being in the eye of the storm right now. This unusual period of low volatility is not a window of what is to come. I think when I talk to investors, there's a high degree of caution in terms of deploying capital. And the general, they are doing their work. They're looking for interesting companies, but their sense is that as we move into the second half of this year, and in September and October, there's going to be adjustment to prices, and they can buy these companies at a lower price. So we're waiting for that catalyst.
Yeah, I read a stat out of Barclays this week saying that if you remove the biggest 6 tech mega cap stocks out of the S&P for the year, actually the index would be in negative territory. So that's just to highlight that a lot of the performance in this market this year has been in a very narrow breadth. It's just been a handful of names that have been leading some of the gains.
Yeah,
do you think that this broadens out, or do the winners start sort of losing some of their momentum because of the other dynamics that are at play?
So my view is that a lot of that has been driven by the flows coming out of passive. And if you track back, where those flows are coming from, underpinning that is the employment number. It's where your pension money, your savings is coming. And if you see a turnaround in employment, I think you're going to start to see, that rolling over. But so the jobless numbers are interesting and always interesting to look at. There was a conference a couple of weeks ago, and David Einhorn talked about the fact that it doesn't make a difference right now. It's stock picking in the smaller cap space is very hard work. But it's interesting. He's looking at the sub $5 billion area to try and get his classic return profile of 50 to 70% over a couple of years.
Looking at Europe specifically, it feels as though the investment community has been overall pretty bearish and defensively positioned year to date. We've seen a lot of investors hiding out in luxury names for the bulk of the year. A little bit of that trade seems to have unwound in the last few weeks. Where would you say consensus sits right now? How are investors positioned within Europe?
So I think if you're looking at the broad indices, and you can decouple the FANGs from the rest of the market, but even if you don't, US market has underperformed Europe. Why is that? Because the expectation at the start of the year was that Europe was going to be hit hard by energy prices. It fared a lot better than people anticipated, and the hard landing that was envisaged hasn't come through. So you look at the numbers, Europe's outperformed the US market. That's attracting people back into the European market. If I was looking at specific names, it's in unusual places that I think you're starting to see capital being attracted. So for a long time, the Greek market, the pariah of Europe, etc., just didn't feature in people's portfolio allocations. There's some really interesting companies coming out there. The Greek market's doing really well. The economy is very buoyant. And we were looking at a business called Mytilineos, 4.5 time increase in market cap over the last 5 years, and a really robust outlook for that company.